Well, good morning, everyone. I hope you can hear me today. This is Paula White, your instructor, and that's good that you can hear me good this morning because last week we had all types of technical issues. This is week 4. So this is the last week of Accounting 444, and I believe it's the last in your series of Advanced Accounting. Is that correct? Yes, it's correct, someone said. Well, I have a couple people online with me today, so I'll keep asking them questions as I continue. Let's first talk about your week 4 final paper. And basically, it says that GASB does mirror the concepts in GAAP, and they want you to go to the external reporting requirements in the GASB statement. GASB Statement 34, and it says it's on page 884, but before this lecture started, there was a text conversation that said, instead of page 884, and I'm looking for it now, Sue found them on page 935. So be sure to take that as advice. If you can't find them on page 884, as stated in the curriculum, go to page 9. Oh, I lost it. On page 935 instead. And basically, you will see the external reporting requirements. And each of those subjects, each topic should be covered in your paper with 1 page for a total of 7 pages. Please do not exceed 10. So let's try and keep it to 7 pages and APA format, and that includes reference pages and everything. And make sure it's well written. And this is your shining moment, is to compare and contrast GASB and US GAAP. So I'm going to ask at the moment, are there any questions outstanding from the previous week or anything? While they're responding, week 3 has been graded, and there's some late work that was submitted for week 1 and 2. Week 1 the week 1 lates have been graded, and week 2 I'm working on right now. And Laura and Sue have no questions from prior weeks. I'm going to show you something that you may not have seen before. If you have, bear with me. Let me make sure that it's, yeah. And this kind of relates back to your paper from last week. Have you ever seen the usdebtclock.org website? No. Well, it's pretty scary, but it's pretty amazing too. This is this is like a dashboard, let's say, of the financial condition of the U.S. government. And if you go to Social Security and click on it, I think, or hover. Yeah, if you go to Social Security right here and hover, do you see this section right here that says usdebtclock.org? Watch that as I go down to the Social Security box. It now says Social Security is a social insurance program funded through dedicated payroll taxes according to the Federal Insurance Contributions Act, FICA. And it says real-time total, and the source is the Office of Management and Budget. So it gives the sources of all this information. And I think that's pretty amazing. And there's a lot of information here. So since this is an upcoming election cycle, it's going to be interesting to keep an eye on these as we keep hearing sound bites from our politicians who are trying to get elected or reelected. And on here we have everything from U.S. population to workforce, unemployment type stuff, how many union workers we have, what the median income is now, how many bankruptcies happened in the past year. What about the U.S. national debt, the debt per citizen, the debt per taxpayer? For every taxpayer, we have federal debt of $154,000. How secure does that make you feel? Then we have U.S. total interest paid, and these are in whole dollars, so this is thousands, millions, billions, trillions. So $2.5 trillion in interest paid, which is almost 7,700 for each citizen. The U.S. This is the U.S. debt. This is total U.S. national debt. So it goes from the government to the actual citizenry. So this is, and here, U.S. federal tax revenue, all state revenue total, how much per citizen, and state tax and local tax. So this is information that might be interesting. Yes, I cannot believe that our states and federal government do not have a budget. It blows my mind. And someone else said, yeah, not very. This is a pretty awesome or awful reality check. However, if you go up to the top left corner, there's the state debt clocks. So I live in California. Where do you live, Sue, and where do you live, Laura? What state? Okay, Vermont. Oh, Ohio. I was born in Ohio. Okay, so we have Vermont and Ohio. So let's take a check. Vermont. Come on. And there's your state flag, your state seal. You have 627,000 population, 15,000 of those are unemployed. You have 78,000 people on food stamps. Your gross, your GDP is 33 billion. Your debt is 5 billion. And your debt to GDP is 16%. Your revenue is almost 6 billion, but your spending is 7 billion. And $8,000 debt per person for your state. So that's kind of scary. Your state is spending what? $1.4 billion over its revenue resources. So let's go to Ohio. So this is always a good source, and you also can go to see which countries and how each country is doing. State debt, and then we have Ohio, right? Well, I did click on it. There we go. Well, Vermont don't feel so bad. Ohio brought in 92 billion, and they've spent 115 billion. Where are they getting the money to run? I think they're getting the money through debt. They have 11 million population, and 1.6 million of those are on food stamps, and 223,000 are unemployed. But you have debt of $85 billion. So, but not to make you feel bad, or let's make you feel a little bit better. And this is the last one we'll go to. And it's my wonderful state that I've moved to. I'm really from the state of Illinois, born in Ohio. But let's see what California is all about. Again, this is usdebtclock.org. Come on, Ohio. Come on, California. We know you can get there. Well, isn't that fun? Out of a 38 million population, almost 5 million are on food stamps. Our debt to GDP ratio is 18%, which is higher than the two of your states. And we are in deficit $27 billion. Revenue is lower than spending by $27 billion, billion with a B. Debt per person is $11,000, and the debt to GDP ratio is 18. And one more place I'm going to show you, and then we'll get moving. But this is a pretty good source for quick information, because it pulls information from a lot of other sources. Now let's go to World Debt Clocks, which will give you a different perspective. Yeah, Sue, I agree. Sue said this is terrible. But the information's good that you have access to, right? Okay. So you don't have a lot of action here, but you have the public debt to GDP ratio and external debt to GDP ratio. Well, gee, United States is 73% of public debt to total GDP, and 98% of our total debt, not just our government debt, but total debt, individual as well as government put together, is 98%. That on itself is pretty bad, but let's take a look. Canada, government is worse than the 73% of ours, is 86%. England is worse on these two measurements than we are by a great extent. So is France. So basically the European Union really is horrible compared to our percentages here, even though our percentages are bad to begin with. India is coming into its own, but it's 51% government percent of government debt to GDP, 19% total debt to GDP. And you can kind of see Ireland, Italy, all basically Europe really is hurting more than we are, which doesn't make us feel any better. Mexico is in the 37-34% range, which is very respectable. Portugal is high. Russia is very low. And then look, Saudi Arabia, 12%, 20%. South Korea, 35%, 27%. So, and Russia, 7% and 39%. So draw the conclusions that you want to draw from that. But it's a pretty interesting website. At the bottom of each one of these, pages, you have a mortgage loan calculator. Talks about energy output and gold and precious metals statistics. So I would suggest you kind of remember the usdebtclock.org, and I think it's a really good source just to see where you want to look into next. It's a good dashboard. That's a perfect word for it. So let's continue on. I did talk about the assignment. I did talk to you about the debtclock.org. Why don't we then go to the PowerPoint and continue on this. I think this is even the last chapter in your textbook, if I'm not mistaken. And it's on accounting for non-government, non-business organizations, and those includes colleges and universities, not-for-profit college. So these do not include the for-profit colleges. Because for-profit colleges, can anyone name one of the for-profit colleges? Thank you. Gross domestic product. I couldn't think of domestic. Thank you, Laura. Can someone think of a college that is a for-profit college? Any idea? Have you heard of a college called University of Phoenix? Yeah. Well, they are a for-profit college. They are publicly traded on the stock exchange. They are part of Apollo Group. Apollo Group, and Apollo Group owns them, but they're on the stock exchange, the stock market. So they are under U.S. GAAP. So they're not under any other accounting except, so that, yeah. So look them up on Apollo Group stock. I don't quite know Independence University or whichever part of that family that you're involved in with this degree. I don't know their exact structure, but I would imagine it would be nonprofit related. But you know, the University of California, UC Davis, University of Illinois, Harvard, Yale. Those are all nonprofits, or what we're calling here. I'm fighting with this silly thing. Okay, it would be considered one of the non-government, non-business organizations. It's because it's non-business and it's not government. But University of Phoenix, for an example, would not fit into a non-government, non-business because they are in a family of companies that are publicly traded. So these are our learning objectives. So why don't we just continue on and get to it. So there are 4 major classifications of NNOs. Nonprofit institutions of higher learning, of higher education. We just kind of talked about them. Then we have also hospitals. They're non-government and they're non-business. So hospitals and other healthcare providers, voluntary health and welfare organizations, the VHWOs, and I love this initials, other non-government, non-business organizations. Are those really on those? So let me see what, I see a comment from someone. Is that what Bernie Sanders, who is running for president, is saying he wants to do when he says he wants Wall Street to pay for students' tuitions? No, what I think what he's saying there, and that's a good question, Laura. What I think, I haven't heard his direct quote, but what I would think he's saying is that I know that students have a lot of education debt, student loans, that are strangling them. And some of them cannot get jobs because basically a variety of reasons. Probably some of the reasons is that even without a degree, they wouldn't be hireable. Or they chose a degree program that there's no jobs in. So there's all these students out there who have graduated and they have debt from their education, and then remember all the billions of dollars that Wall Street and all the banks were given to bail them out? Well, I think he thinks that we bailed them out. Why not let the money that they got, that they supposedly bonused to themselves, basically they want them to pay off the tuition of the other individuals, and as the right thing to do. I think that's more what he was trying to say there, and not Wall Street as the stock exchange, but Wall Street as the stock exchange companies that got bailed out a couple years ago with all those billions of dollars, hundreds of billions of dollars, to keep the economy going, including the banks. So that's what I think he's going for. But this is a great point, Laura and Sue, and anyone else is listening. When you hear something like one of those comments, like Bernie Sanders saying he wants Wall Street to pay for students' tuitions, you are now academic. You have an awesome library, and you have a little thing inside of you now called critical thinking, and you also know how to get some answers. You know how to do research. You have an awesome library, and you know how to research. So you can start, if something doesn't quite sound right, or it sounds too good to be true, you can start doing your own research instead of it being a homework assignment. It can be your own assignment to understand what these folks are saying and whether it's true or not. And then Sue says, interesting concept, but will it actually happen? Probably not. Most people in businesses do not want to give their money away once they have it. Right. So basically, should they have been given the money anyway? And then just, if they hadn't been given the money anyway, then the government would have it, so they can just give it to the folks that need it to get out of their debt. So I think it's basically a stab at the federal government and what they did with the money, since they're kind of trustees for the money of the taxpayers, right? It's kind of fun that we can get kind of political with accounting. Usually the two do not intersect too well. So we also have other non-government business organizations. You can read the hierarchy as well as I can, because I did submit this. You do have these PowerPoints to you in the announcements from last week. So most guidance for N&Os is found in the audit and accounting guides of the AICPA. Like colleges and universities are under the audits of colleges and universities. So this is other areas that you can go to get more guidance. For not-for-profits, there are 3 basic financial statements. And one is a statement of financial position, which, as we know, is basically the balance sheet. Let's see. Continuing our conversation here. Yes, but the federal government is slipping. Yeah. And then continues, maybe the government should give it back to the taxpayers who have had high student loan debt. Yeah, I think that's his point. And then Sue agrees. They could give it to them during tax refund season. Yay! And then you can be really busy doing tax returns, right? Right. Good dialogue on the side. So we have net asset categories, and we have unrestricted net assets, temporarily restricted, and permanently restricted. And then we have statement of activities and statement of cash flows. Continuing with the conversation, or they could just pay the loan so it gets paid. You know, if people have money in their hands, a lot of times they don't spend it on what they should spend it to. So they should just, if they want to do that, just they forgive the debt, right? True, they could also do that. That is also true, right? Yes, right. So it looks like the three of us are on the same page. Okay, so there are 6 commonly used funds for N&Os, and those are the current fund, the plant fund. Let's see. Yes, you should start your own business.
Together.
Yeah. Why not? What would you want to do?
Run the federal government loans for schools and stuff.
You would want to run them or manage them?
Manage them. Work with them.
Okay. So you have gone through all these courses now, and you could put together a business plan, right?
Yes.
Yeah. So am I talking to Sue?
Laura.
Laura. There's no reason why you can't figure out what you want to do as a business on your own. No reason. I've had my CPA practice. It's still going. I own a publishing company now, and our book launched last Wednesday. It's available on Amazon and Barnes & Noble, and we just talked to our publicist today, and we have book signing and radio and TV coming up in both San Diego and the state of Washington at the moment. So she's working to get us out there. So that's another business. Yeah. Thank you. Thank you, Laura. I keep wanting to call you Jim because that's what your computer's name is. If you want to check us out, just for curiosity, it's myact3, the number 3.com. And check it out and see. The hardest part to write that was our bios, because it's so easy to write your bio now. Oh, it's called Act 3, your anti-retirement playbook. And it's not just about retirement. It is a focus for the baby boomers, but it's anyone who's going through transitions. What do you do? It has you look at your interests, your dreams, your attitude on work, your finances, nurturing your soul, technology. So you can pull those together holistically to figure out what you want to do in the next phase of your life. There's a lot of people who are retiring or forced to retire that when they do, 2 months later, they're not happy. They're not happy because they didn't really plan for this next stage of their lives. So that's what it's all about. And it is a workbook. It's got anecdotal stories, it's inspirational, and it covers all those areas, as well as having you write your act 3 of your life's play, which is kind of a cool thing. So, but it is a business too. So there's no reason, if you have an idea for a business, go for it. Do not stop. And if you want to contact me for advice or anything, you know how to contact me. My cell number also is 760-710-7841. I would be glad to be a sounding board, an encourager, or, even say, I don't think this idea will work the way you stated it. What's a different way of getting that done without throwing the baby out with the wash? So, oh, not a problem. I would love to do it for both of you and for anyone else listening. Because I think it's a great thing for students to actually have an avenue of something out there bigger than a job. So anyway, back to this. We have all these funds commonly used in a nonprofit. And let's go to the fun stuff. Okay, you have unrestricted funds and current restricted funds. And basically the difference between, oh, you're welcome. The difference between the two of these is that if it's unrestricted, financial resources can be spent at the discretion of the governing board. If it is restricted funds, though, they're restricted because of legal, contracts, or external restrictions on their use. So they can't be used for anything else except for the purpose that they were provided for. And that makes sense. So accounting for board designated funds let's talk about a church. You have people giving money to the church, and they want the money to go to the church for stained glass windows because they want their mother's memory to be respected, and they want a new set of stained glass windows, and we gave $50,000 for that. That $50,000 cannot be used for anything else. It is unrestricted. It is restricted, permanently restricted. It can only be used for the stained glass window for my mother's memory. However, then everything else becomes unrestricted. Well, what if the board designates funds? That's like the board directors, we're all on the board directors, and we say, we need to take $100,000 of our money and move it over to and designate it to be used for a specific purpose. So that's not quite restricted in the sense of restricted, and it's not quite unrestricted because they want to kind of protect it. Well, that's a designated fund, and it is part, though, of the unrestricted fund, and it's designated by the governing board for specific purposes, projects, and investments, and to limit discretion of the management. And a governing board can modify designations, and in hospitals is classified as assets whose use is limited. So, Sue, what type of business would you want to start? Would it be nonprofit or a profit? Or what type of book would you want to write? And Laura, the same questions for you. You want to help manage the student debt. So what book, do you have a book in you? Oh, so Sue did have a trucking company, and it lasted for 3 years. And Laura wants to write a book to pass the wealth around. So have you started outlining it? And don't tell me you've been busy studying in life. If I had to decide, I would probably go for profit at this point in time, but subject to change. Okay. So would you go back in the trucking industry? Or would you be an accountant? Or would you start an accounting firm or a bookkeeping company or a tax preparation company or anything in accounting at all? Kind of questions to think about, though. Well, feel bad about helping the poor folks, only the middle class and the wealthy. But what can you do to help the poor folks? What type of, you can't help everyone, but what type of nonprofit would you want to set up in order to do something? And Sue wants to work in the accounting field for a while and then open up your accounting business. Good. Get your experience, get your confidence, and then branch out on your own. Very good, Sue. Well, I'm going to move the chat box over a little bit and continue. So let's go to on contributions. You can always read, but at least let's talk about some of the journal entries. Laura thinks people should be educated better in financing. Oh, yeah. Because remember back with the mortgage bust, people were getting mortgages for houses that they couldn't ever be considered able to afford. And that's been fixed since, but that was part of the problem. So we have a well-known celebrity-sponsored telethon for Help the Blind Foundation on November 1st, 2008, and there were pledges made of $1 million through people calling in. Using similar telethon campaigns as a basis, it's estimated that 25% of those pledges will be uncollectible. So during the next year, 700,000 of the collections from these pledges were collected, and the remainder were uncollectible. So we thought that 25% would be not collected, but really 30% would be uncollected. So identify the appropriate funds and prepare these journal entries as necessary for the 2 years to record the transactions. I saw movement in the chat box. Okay, so back to the conversation. In the area where Sue's parents live, they closed an elementary school, and she thinks it would make a nice place for people to stay when they're in need of help until they can get back onto their feet. That's great. That was me. I never questioned the bank. And then Sue says, have people there who can help them and get aid and education, find a job, or whatever else they need help with. I think that'd be great. You would probably have to figure out how to buy the school or lease it out from the state, or maybe if they've closed it, they should possibly consider opening it, because a closed building is really bad for the structure of the building. Oh, the school district is selling it. Okay. Well, there's opportunities out there everywhere. So the journal entries necessary for 2008. We have pledges receivable, $1 million, and revenue contributions, $1 million. Then we have the provision for uncollectible pledges, $250, and allowance for uncollectible pledges, $250. Very similar to for business industry. Then we receive cash, and we take that away from pledges receivable because we already recognize revenue of $1 million. Then we have provision for uncollectible pledges, a debit of $50,000. We're going to debit allowance for uncollectible pledges for $250,000 and credit pledges receivable to clear out the pledges receivable account. And that's what goes on with that. Okay. One just has to be willing to go and look for them and make the opportunities become a reality, and hard work to keep them going. And always have the dream in front of you. Always have the dream in front of you. So I encourage you all to find out what your dream is and just continue to go for it. Yeah. But the willingness for hard work, the willingness to get dirty, the willingness to be persistent, and we can change the world in any way that we want to. So donated services are kind of interesting. You recognize them only if the services are received. You create or enhance a non-financial assets, or you require specialized skill. Are they provided by individuals possessing those skills, and would the work need to be purchased if not provided by donation? So here we have, in 2008, a volunteer pinstripers donated their services to General Hospital at no cost. The staff at the hospital was in control of the pinstripers' duties. If a regular employee had provided the services rendered by these volunteers, their salaries would have been $6,000. While working for the hospital, the pinstripers received complimentary meals from the cafeteria, which normally would have cost $500. So what's required is prepare the journal entry necessary in the general fund to record the donated services of the books on the hospital. So let's see here. So we're going to debit general services expense $5,500 and credit donated services non-operating revenue $5,500. Because we would have had to pay $6,000, and the meals that they ate did cost us about $500. So that leaves $5,500 to account for. So you're going to have revenue of $5,500, and you're going to have general services expense of $5,500. Does that make sense to you all? Yeah, why can't they be all that easy? Laura says. But you know, it wouldn't be easy because do you think it'd be 6,000 or 550 or not even make the entry at all? So there's some judgment there too. So you're just to the point that it's easier now. Okay, so now we have the Franklin Public Library, and we received a restricted contribution of $300,000 in 2008. The donor said that the money has to be used to acquire books of poetry written in the 16th century. At the end of that year, only $100,000 of the restricted resources had been expended. So let's prepare the journal entries. So you receive the $300,000 in cash, and so that's debited cash and credit to contribution revenue, poetry collection. Then we're going to debit net assets released from restrictions, 100,000, and credit our cash, 100,000. Then on the unrestricted, so that's the restricted current fund. Then on the unrestricted current fund, we get the cash. So the restricted fund expends the cash, we get it in unrestricted current fund. And then the clearing account, the net assets released from restrictions, basically clears out the net assets released from restrictions. So that's like a transfer account so that we can get cash from the restricted fund to the unrestricted fund. Once the cash is in restricted funds, we expend it by crediting cash and debiting expenses for the poetry collection. Okay. So after the election of a prominent political figure, the principal from a term endowment fund was expendable by Crandall University. The official was elected this year. The fund was restricted to the construction of a political science building annex. The following transactions occurred because of this event. So let's see what that looks like. So you're going to transfer $3 million from endowment to the unexpended plant fund. So the endowment fund had $3 million. You're going to debit the fund balance, and you're going to credit cash to get it out of the endowment. You're going to debit cash in the unexpended plant fund to receive the $3 million, and the fund balance is going to be restricted. But that's that one. Oh, excuse me. So part 2 is construction has begun on the political science annex. Costs of construction during the year amounted to $1 million, of which $30,000 remained unpaid at the end of the year. And the controller doesn't record transfers to the investment and plant subgroup until a project has been completed. So you're going to debit construction in progress, $1 million, credit cash, $970, and credit accounts payable, $30. And then at the end of the following year, the annex has been completed at an additional cost of $2,000,001. All costs have been paid. So you have debit, still in the unexpended plant fund, you debited construction in process, $2,000,001. You debit accounts payable, $30,000 to pay it, and you credit cash, $2,130,000. Yes, if you need to be, that can be done in 2 entries. But this shows you an entry combined. And then you have work in progress has now a balance in it of $3,000,001 from this whole process. So you're going to get it out of work in process with a credit and debit your building account. So that would be how that works. And now the building is complete and is recorded in the investment in the plant subgroup. So you're going to take it out of a net investment in plant, and you're going to debit building instead. Check the chat box, and nothing has been continued. Okay. So now we have accounting for endowment funds. Jefferson Hospital received money from a donor to set up an endowment fund. The following information pertains to this contribution. Prepare the journal entries necessary to record the events in the endowment fund. So we have several events. So $2 million was received to establish the fund. The requirements were $100,000 of the endowment fund's income must be used for research grants each year. The remainder of income is under the discretion of the governing board, and the principal is expendable after the donor's death. It shall be used to purchase equipment. So we have cash, debit, and credit revenue contribution restricted. That's to receive the cash. So the cash received was invested in a number of securities. So you have debit investment and credit cash. Dividends of $100,000 and interest of $300,000 were received. So debit $400,000 cash, credit due to general fund $300,000, and credit due to specific purpose fund $100,000. And the income was transferred to the appropriate funds. I need coffee today. Due to general fund, $300,000. Due to specific purpose fund, $100,000. And credit cash to get it out of that fund, $400,000. Was notified of the donor's death. So transfer to the plant replacement and expansion fund, $2 million. And cash is credited $2 million. And that's it. And then it goes into SFAS 124. I'm just going to see what else. So we have the last 5 minutes here, ladies. Is there anything else you want to talk about? This is our last week. Oh, sure. So you're going to go to the, she says, yes, just clarify the final paper information. Basically, in GASB 34, there's external reporting requirements on the page that we mentioned, what, page 935? And for each one of those, when you say 10 pages, does that also, no. So limited to 10 pages of your work. So 7 pages, yeah. So it doesn't include the cover page. It doesn't include the reference pages, 10 pages, because it looks like the way it was written that there's 7 requirements, because they said keep it to like 1 page and therefore keep it restricted to 7, not more than 10 pages. But when I get my papers done, can I send them to you to make sure I have the right context? Yes, you can. Yes, Laura. 7 pages for the context, and then the, yeah, you'll be good. Is this your last class, period, or do you have other part of your curriculum? Others are coming up? Okay. So what 3 classes do you have left, Sue? Are they accounting classes or business? Oh, stats, psychology, and accounting. Well, good. Do not, just like accounting courses, do not fall behind. They wanted me to sign up for business, but I want to do what Sue is doing, getting close to graduating. Isn't that a great feeling? 3 classes and you're almost done. Congratulations. Ladies, it's been a pleasure chatting with you, working with you through this course. And Laura will be done in November, and I think Sue will be done after 3 more courses. And that would be, do you take one class? I can also send my paper over. Yes, you can. 2 coming up, then 1 more. Okay, so July, August. So you'll be done in September. Okay, we'll be done in September. Well, good. Well, it's been a pleasure. I've enjoyed every moment working with you 2 ladies and the rest of the people in the classroom. And I wish the best to you. Certainly, you can send me your papers for a quick review. If I see you're way off, then I'll let you know. Oh, you're so welcome. And thank you. That's a compliment. Thank you very much. And again, I'm serious. If you want to keep my information, you can always call me up or contact me for advice or good news or any of that type of stuff. Just like I shared my good news with you about the book and the publishing company, but that was also for the purpose of you can establish any type of a business that you want to because you know how to do the accounting. And that's a cool, very important skill set. And then I'll say thank you, and applause to you for your accomplishments. And have a great day and have a good week. We're almost done with this class. Take care. Bye-bye.